Hey guys, good afternoon, everybody. Today is Friday, June 28th. It is 1:57 right now. Our scheduled mentoring session for the day is at 2 o'clock, so just a few minutes early. Got on a bit earlier to set up the room. So I'm just going to set this up real quick. And once we are done setting up, we will start with the group mentoring session for this month. So mark this up real quick. Looks good. It's been a while since we've had a last mentoring session. All right, looks like we are good to go. So I'm gonna go ahead and send this link out to you guys here in the premium. Link is sent out. All right, so let's get a few moments for people to make their way in. If you guys have any questions, feel free to put them in the chat. Otherwise, we'll get a few moments. I'm on a little early today, so people will be trickling their way in. And I really don't like this new Zoom interface. It's kind of annoying. All right, so people are still joining in. Hey, Jamie, how's it going? Hey, Bamal. Good afternoon, everybody. All right, guys, it's 2 o'clock. Today is Friday, June 28th. Scheduled mentoring session for today is to start at 2 o'clock. It is 2 o'clock now. We'll get a few more moments for people to make their way in. But if you guys have any questions, feel free to put them in the chat and we will be answering them in order. I think the main focus for today is probably going to be, the market flow entries. Since that's pretty much what we've been doing. So I'll show you guys a lot of examples of that. But if you guys want me to review anything else, feel free to hop in the chat and I'll cover whatever strategies, theories, apex, and whatever it is that you guys need help with, just pop into the chat and I'll help you guys out. I know we don't have these mentoring sessions as often as we used to. I'm going to try to host them a little more, at least once a month, if not every other week. I've just been busy with trying to get the whole hedge fund running. So haven't been able to focus too much on mentoring or teaching as much as I used to or as much as I'd like to. Hey, Valentine. Good to see you. I haven't seen you in a while. Yeah, you too, Kenny. Hey, Kenny. I haven't seen you either, Kenny. I feel like you've been busy at work. I know you got that job last time we spoke, working at the forgot that story you were asking, you were telling me about. But yeah, no, it's good to see a lot of you guys here. A lot of old faces, a lot of new faces. Yeah, no, I've been great. I've been great, Valentine. The market's been kind of all over the place, but I'm glad we're able to adapt with the market. We're now doing what we call market flow. It's not really too complicated. The way that the strategy works is we're basically just riding the wave. So for example, we see how the trend moves down right here. We're just looking for entries as price bounces and comes back down further. So I'll show you guys some examples of that. I'll bounce between YM and NQ. It's a little easier to see on NQ, so I'll be doing that. But yeah, for the most part, If you guys have anything else that you guys want me to cover, feel free to pop into the chat. So let's just start off with those entries that we just discussed. So I don't see any specific questions over here. I don't have anything lined up for today. So we're kind of just going to do this we're just going to play by ear and see what you guys want me to focus on as we progress. But let's see. Let's see. BM said I have new XFAs. Would you say the recommended route is to grow them? To grow them is to trade 1 to 4 micros or risking 1 to 3% of 2,000 per trade until you've passed the drawdown level. So I know the drawdown works a little differently with Top Step. I'm not sure what the max risk is. What's like your max drawdown that you can have, BM, for Top Step or XFA? Because it's not the same as Apex. I know it's a little easier. But the way that I would do it typically is I would basically divide your max drawdown by about 7 trades or 7 trading days, not 7 trades, but 7 trading days. And then generally I like to take about 2 trades a day. Well, currently right now it's 2 trades a day. Usually it's like 1 loss and then I'm done, but lately I've been doing 2 trades a day. So okay, 1K is your max daily loss. What's your well, it wouldn't matter because 1K is going to be your max daily loss. So yeah, I guess if 1K is your max daily loss, I would risk probably I would say about 400 per trade. I mean, depends on your trading style too, BM. So I'm not sure like what your trading plan is. Like, are you okay with losing 1 trade a day? Are you okay with losing 2 trades a day, 3 trades a day, 4 trades a day? Depending on that, you would just divide your max 1K daily loss by that many trades, right? Because you want to be able to take as many trades as you like to fit your trading plan. For me personally, I take about like 1 to 3 trades per day. So for the day, I'm typically I'm okay with risking about 2,000 on per day on my 300K account. So I'm okay with risking about 2,000. So I'll risk about 750 per trade, right? Because obviously 2,000 is going to be my threshold where I need to stop for the day. So I think that's about 10 contracts for me. 10 contracts times 5 times 15. So yeah, I'm risking about 750 makes 750 since most of my entries are 1-to-1. So for me personally, I'm looking to take 2 trades a day. It's either going to be 2 wins, 2 losses, or break even, 1 win, 1 loss. So, I mean, you would do the same thing. Like for you, I'm not sure if you're trading, I'm not sure what the micros are like because I only trade minis, but if 1,000 is your max drawdown for the day, you probably want to use maybe like a 5 contract. Okay, let's see. So I think 5 contracts would be it. Around there. So maybe 6 contracts. That's 6 times 5 times 15. Okay, so 6 contracts will probably be 6 minis. I'm not sure what the conversion is between minis and micros, but I'm assuming it'd be like 60 micros, right? Because like times 10. So, I mean, depending on what you're trading, I would just trade the minis. You don't really have to trade the micros. I mean, it's really up to you. If you want to trade the micros or the minis, it's the same thing. You're just basically doing the conversion. So the conversion for the minis would be, if you're trading YM, it would be 450 risk per trade. If you're taking 2 trades like I'm doing, so you take about like 6 contracts per trade. Well, no, you would, so it would have to, are you taking my trades or are you taking your own trades? Because again, like that's where it kind of changed a little bit because I'm using a 15 TP stop loss. So I'm basically doing my calculations based off whatever I'm doing. So what I would recommend you do is go to TradingView, just hit buy or sell, and then whatever your TP stop loss is right here, you would just put that in there. Like for example, mine's 15, right? So I'm doing 15, 15 basically every entry. And then my risk over here that I'm willing to risk, which should be right here, I would put, for me, I would put 750, right? You want to risk for you want to risk about under 1,000. So you put like 500 right here, right? And it pretty much automatically does it for you. So if you pull up TradingView, you can just open the buy window on YM. Or for example, if you were to trade MYM, like again, you wanted to trade the mini, which is completely fine. You can do that too. You pull up the mini right here, hit the buy button. If you're taking the same trades as I do, and you're doing like a 15-15, again, you do the same thing here, right? You're risking about 500 per trade. So you would be trading 66 units. So it's actually a little more exact if you're trading the micro. I could see why you want to trade the micro because you could trade, it's more exact versus the mini, which is kind of split. You'd be trading like at 450 risk. So this is probably your best way to identify it. BM, just go to TradingView, open a buyer or whatever window, an order ticket window here. Put whatever your TP stop loss would be. If you're doing a bigger TP stop loss, you can always change that to 30-30 or whatever you're doing. And then your units will change here, so you'll know how much to risk. But you already know that your risk for the day is 1,000. So depending on how many trades you want to do, you just divide that by how many trades. And then, so if you want to take 2 trades a day, you'll risk this much. You know, if you want to take 3 trades a day, your risk is 1,000, obviously. Divided by 3, you'll put 333. Your contract size would be 22. It's just up to whatever you plan on doing. But this is the best way to do it. Just divide your max daily loss by whatever, how many amount of trades that you plan on taking. Yeah, no problem, VM. I know it's kind of confusing, especially if you're trading on a different platform or if you're trading like the micro. I've never traded the micro before. It moves the same as the mini, but of course, if you want to trade a more concise contract size, you would just do the micro. Okay. Yeah, no problem. If you have any other questions, feel free to hop in to the chat. Let me go over the question first, guys, before we go over the market flow entries, because that's probably going to take most of our time here. So we have one question over here from Vimal. So Vimal's question is the CB entry. So let's go over that first. I'm going to go over the CB entry or CB strategy, whatever you guys want to call it. And then once we cover that, we will go over the second question from Vimal, which is approach to pass an Apex 50 account, 50K account, and 150 account. So, all right, let's start off with the CB entry. Let's go back to where the volatility was high, or at least decent. So we had volatility right here. Let me see if I can find a CB entry. I don't really see any here for today. I'm going to clean this up. We don't really need the levels for the CB entry, so I'm just going to take that off. All right, so I don't really see any CB entries over here from this morning. Let's go to, let me just rewind it a little further. There might be some CB entries over here. No. So I don't see any CB entries from today. Okay, let's go to yesterday. I'm gonna rewind this a little further. So go to yesterday's market right here. I'll just replay from here. See if there's any CB entries here that I can show you. Nope. I don't really see any here either. Oh, actually, there's one right here. Okay, so here's one right here of them all. So for the CB entry, there's just a few criteria. It's a very simple strategy. The first thing you want to do is identify a bias or a trend. Obviously, right here, you're going to look for sells. The reason for that is because price is below the pivots. The pivots are angling down. We have a downwards trend over here with regard to the pivots. You can see that the trend meter down below is red, and the divergence here is shifting to the downside. So the first thing you want to do is identify your bias, right? Because obviously you want to take trades in one direction. You don't want to trade both directions when trading the CB. You can trade both directions, but for the most part, you should be focusing in one direction because you want to be trading in the direction that you think price is going to go. So for example, over here, like I said, price is bearish, and it's pretty clear here that price is bearish because price was below the pivot. So then it looks like price is just pushing up a little bit and then coming back down, right? So once you confirm the trend or the bias, then you would know which direction to trade in. So since you're looking for a sell over here, the first criteria is that you're looking for a high. You're looking for a high with a green candle. The reason why you're looking for that is because you're looking for the reversal. The CV pattern is a reversal pattern. So basically right here, you can see how price comes down, hits a low, hits a high right here, and this is going to be basically your first requirement. So you're looking for a high with a green candle. And the second criteria is you're looking for a red candle, obviously the opposite because you're looking for a reversal, right? This is a reversal here. You're looking for it to come back down. So you're looking for a high with a green candle, and then you're looking for an opposite candle for correction in the direction of your trend or bias. You want to make sure that that following candle is smaller than the high candle here. So this is a CV entry, of course, because you have a high with the green candle. Following candle is red. It's smaller than the green candle. And then you would take the entry right here for a sell. The only thing that you would look out for other than this would be for red flags, of course. There's no red flags in this area. You can see the session is up here. There's a session down here, but I mean, you have enough space here to take your trade. So depending on like what type of TP stop loss you want to use, typically we would use a 10-20. And again, this is up to you. It's up to whatever you want to do. If you want to do the original way, it's 10-20. If you want to do what we've been doing lately, we've been doing 1-to-1s for 15-15. I mean, it kind of just depends on how the market's moving, right? Right here, the ATR is at 11, so I think a 15-15 could be okay. But I mean, if the volatility is a lot higher, you do something like a 10-20, right? Because you want to have that cushion just in case price retraces up a little bit. So this right here is a setup. That's a CV entry as price comes down. And that's exactly what you're looking for there. So you see how price established a high point, you find that reversal there. Of course, price here consolidates a little bit because this is later in the session, but it does play through. So there is an example of a CV. This is an example for a CV entry for a sell. I'll look for an example for a buy. It's the same thing, it's just in the opposite direction. So as you can see over here, I switched it back to the 15-15. So depending on what you wanted to do, you can do a 15-15, or if you want to do the original 10-20, you can do that as well. It's just up to preference. I mean, for me personally, I like doing 1-to-1s now because it doesn't put me in a deep hole. You know, if I end up losing a trade, I could end up just making it right back on the next trade. So I've been doing 15-15s lately. I mean, it kind of depends on how the ATR is moving, but of course you want to have like some volatility in the market. So there's one example right there for a sell. I didn't see any other CVs. I know you mentioned at 10:06. Let me go check real quick. Did you say 10:06 from today? Or sorry, 11:06 from today? Or were you talking? Okay. So I'm over here at 11:06. I kind of want to understand your reasoning behind this right here. Actually, you might be right. So let me go back over here and just replay it because maybe the high was a little closer. Okay, yeah. So this right here is a CV entry, but it's exactly at a red flag. So obviously would not take that trade there. It's a CV pattern, but it's like super, I mean, it's pretty obvious. It's like literally at the red flag. So you wouldn't take a trade right there. Do you have another example that you want me to look at, Gamal? Because I mean, that's the main thing that you look at. You wouldn't take any trades at any red flags here. So it is a CV pattern. The pattern you identify correctly, it's right at the session. So you wouldn't take a trade there. Okay, yeah. If you see something else that you want me to clarify and review, just let me know. Because I know there's going to be some entries here that you might have seen, trading on your own, and you want to have some clarification. Just like, for example, here, this might have been one that you would have looked at, but because it's at the red flag, you might have missed that. That's exactly why I would have avoided the trade there. And you can see why. So like, let me show you exactly why you would avoid the trade here. Because if you would have entered the sell right here, you'll see that price gets highly manipulated right after this, right? And it would have hit your stop loss. So that's like a clear example of like why you would avoid any trades near the session. for specific strategies. For the market flow, it's a little different because you can just catch the rejections off it. There wasn't actually a rejection here. This is kind of just a fake out. So price came below, faked out, came above, faked out, came below right here, faked out again, and then it came above right here, of course, right? So, I mean, and then you can see right here, it fakes out and comes right back down. So you just avoid the red flags at that point. Let's see, let me scroll up real quick. Question from Sean. Sean's asking, does the candle need to between the first two pivots and the last two pivots, or can it be anywhere amongst the pivots as long as a higher high? So let me go over here real quick. And that's a good question. So the question that you're asking is basically, does a candle have to happen in between the first two pivots? It has to happen right at the pivot. So you can't have anything after it. So for example, here, see how this over here kind of pushes higher? So for example, this is a setup, right? And then you can see that if this here was an entry, you'd have to take it right there, because if it continues to push out further, it's going to establish a new high, right? I mean, this wouldn't be an entry right here. This would actually be a V1 variation. So the entry has to happen right at the pivot. It can't happen at, like, the pivot is going to be one of the criteria. That's going to be requirement number one. Let me see if I can put their criteria up here real quick so that you can see. You probably haven't seen the criteria because I know you were looking at the entries or that strategy after, but the break. Man, I got so many strategies here. I swear I made one for the CV. If I didn't make one, I'll just make one right now. I keep saying I'm gonna fix this, but I never do. Yeah, let me I just want to double check it one more time. Divergence. Okay, I don't think we ever came up with the criteria. So let me go back to that example that we had earlier. And I'll put the set criteria there. And then Nishan, if you want to take a screenshot or write it down yourself, or I can post it in the group chat, we can do that so that you know exactly what to look for. I know it's kind of hard for you to understand like what the criteria is because we never put the criteria up. I've only covered it a couple times, and I haven't made the official video for it, which I should. I just gotta stop being lazy. You guys know me. I never try to do more work than is necessary. So if you guys know me, if you guys been trading with me for a while, I typically I'll do work or I'll do something if you guys ask me. Like for example, this mentoring session. I wouldn't have done this mentoring session unless you guys asked for it. It's not that I don't want to host it, it's just that I'm a lazy guy. For the most part, I'm a lazy guy. And there's no one else that can really host this mentoring session because I pretty much I created the strategy, so I should be the one hosting it. Anyways, I'll use this example here because this is actually a pretty good one. Let me put the criteria right here. So this is going to be Kodi Kai, consolidation, variation, strategy, CB. Call it that right there. Okay, thanks, Vilma. Let me check. Thanks for raising your hand. I swear there was one there too, but I'm just blind. So let me see if I can open it up. Man, I hate how they have these. TradingView always has updates and they're not typically good. Okay, so consolidation. Let me go down this list here. Oh, there we go. It's a dumb name. I gotta, I'll change the name so it makes sense. Thanks, Famal, for the heads up. I'll just rename it. I guess the name's not that bad. Consolidation variation. I was just looking for CV. I'm gonna change the name a little bit. So 1025, 1030. I'll change this too, because we don't really. Based on volatility. I'll just put based on volatility. 10, 20, 10, 30. And I'll just put these here. It just depends on like what you guys want to do. All right, I'll put options here for whoever wants to kind of do things however you like. But for the most part, I've been using this the 15-15 lately, and it works very well. So let me just rename this real quick. I'll call it consolidation variation. See the entry. Just so that we have an idea of like what it is. Yeah, no, thanks Mo for the heads up. Save me the hassle of redoing the criteria. Okay, so here are the requirements for it. Right here, and I'll go over the requirements in order now so that you can kind of like know for sure what to look for, right? So your first step is to identify the trend using the pivots. So to identify that, you want to make sure that price is below the pivots and the pivots are angling in a certain direction. So right here, you can see prices below the pivots. It's obviously in a downwards trend. If you go over here, you can see how price is above the pivots. It's in an upwards trend. So that's how you can identify what the trend's like. That's going to be step one. So step one is identify the trend using the pivots. Step two is identify a variation reversal pattern. So you're looking for a double body, double wick. But actually, that doesn't make sense. Oh, okay, no, sorry. That is right. So there's two different patterns that you can look for. You can look for a double body or a double wick. That doesn't happen very often. It happens sometimes. So for example, you're looking for something like something similar to like this right here. It's a V1 pattern. So a variation pattern would be like a V1 pattern. It's just that sometimes they're lined up and sometimes they're not. Most of the time, you're going to see them like this where they're not lined up. So obviously the double body, double wick is going to be more ideal. If you see something like that, that's going to be like a really good entry. If you see something like this, it's still good, but it's not going to be as good as a double body or a double wick. So again, first step is to identify the trend. Second step is to identify a reversal pattern, variation reversal pattern. The first one is a V1 pattern. That's where you have a double body or double wick on the same level. And then this is the second one where you could have a high with a green candle and the following candle is opposite. So that's going to be step two. For step three, you want to confirm that the second candle is smaller, just like this one here. So you have a big green candle here, pushes up, and then you have this over here where it comes down, and this identifies as a reversal type pattern. So once you have that there, as soon as the candle closes, that's where you'd make your entry. Again, your TP is going to be based off your volatility. So depending on how the volatility is, if it's slow, you can do a 10-20, you can do a 10-30, or you can do a regular 15-15. Basically, if you do around ATR price or ATR movement, you should be perfectly fine. So if the ATR is like 30, then you probably don't want to do a 15-15. You probably want to do a 10-30 because the volatility might be too high. So that's kind of what helps. Just make sure you look at the ATR because the ATR is going to show you what the volatility is like at the time. Right here, obviously it's slow, so you could use a smaller TP stop loss. Let's see. So Sean said might be double. Yeah, no, you're fine. Sorry, it just confused me too because we never really look at this. If I see an example, I'll show you. So I'll keep going back over here and I'll see if we find an example for a buy. But for the most part, this is the criteria. Pretty straightforward, not super duper difficult. I'm gonna keep moving over here and I'm gonna see if I could find an example for a buy. Or if I could find an example where it's a double body or a double wick. Either or, they're both reversal patterns, so they both meet criteria. Yeah, the CVs haven't came up very often because the market's actually been pretty volatile recently, which obviously is a good thing. When the market's going sideways, that's typically where these CVs come up. and they come up more often. But this whole week's been pretty directional. So you're not really seeing too many CVs. You'll see some variation V1s, but not CV entries as one. Let's see, I'm all set at 9:11. 9:11. Are you talking about today? Well, let me see. Because I don't see one over here. Maybe you're talking about today. This is from yesterday, so I don't see it over here. Let me go back one more day. I'm gonna see if there's anything on Wednesday. Okay, so here's perfect. As soon as I came back over here, actually, never mind, take that back. This high wasn't green. Actually, no, okay, there's one right here. Perfect. So this is a double body pattern that we just discussed. So again, right here, we're identifying the trend. The trend here isn't super confirmed, but you can see it's still bearish because price is below the pivots. Trend meter is red, pivots are angling down. You can see the trend is starting to shift to a bearish trend. You're going to identify the reversal pattern. This is what we were talking about earlier. So either a double body, double wick, or a high with a green candle and a low with the red candle. Right here is a double body, double wick, or it's a double body actually. The bodies are on the same level. There's no wick. So this here is the first variation. So this is another reversal pattern. Price came down, came back up. This is a reversal or a reversal anticipation. So we have that there, double body, double wick. This candle here is smaller than this one. So you would set up your entry right here. Your TP stop loss, again, just kind of depends on what you feel like. If you want to do a 1020, do a 1020, 1030, 1515. For me personally, I've been feeling the 1515, so that's what I've been doing lately. And you can see here as price drops down, straight to full TP. There's an example of a CV entry right there. This is more so a V1 variation, but it falls under CV because the candle is smaller. So you kind of get a double confluence because you get the reversal pattern, but because this candle is smaller, you're anticipating price to correct back down. Basically to fill this big candle here. So let me go back a little further and let's see if we could find a buy entry. So there's a buy entry right here. The only problem is that it's right at the session. So you probably wouldn't want to mess with it. Yeah, I don't want to show you guys bad examples because I don't want to give you guys, I don't want you guys to have bad habits when looking for entries. Okay, there's one right here. Let me see. No, actually, it's not it. So we're looking for a low with the red candle, followed by no, I don't see any here. Let's go to Monday. Monday and Tuesday were bullish. Sorry guys, I'm trying to find an example here, but it's not really. Okay, market was bullish right here. Let me see if I could find one in between. Okay, perfect. So exactly what I was looking for. Okay, so here's a buy example. Let's try to put the consolidation. Okay, so here's an example of a buy. Right here, we have a bullish trend. You can see prices above the pivots. The trend meter is green. Pivots are angling up. Obviously, you're going to be looking for some buys here. First, you're going to identify the trend, like I just said, bullish. Second, identify the variation pattern. This isn't a double body or a double wick, but you have a low here with the red candle, and it's followed by a smaller green candle, right? So this right here is going to be the second criteria for a reversal pattern. So first, you identify the trend. Second, you identify the reversal pattern right here. Third, you want to confirm the second candle is smaller. Of course, it's smaller right here. As soon as this candle closes, you'll enter for a buy. And then again, your TP stop loss is just up to you. If you want to do a 1030 or 1020, you do a 1020. You want to do a 1030, do a 1030. It's just up to your risk appetite, right? If you want to have a big safety net, then go ahead and have a bigger stop loss. But again, lately I've been doing 15-15. It works perfect for me. The ATR is pretty low, so I think that's good enough. Let the trade here run. Price kind of pulls back into some retracement, it climbs up from there, and then it hits full TP right there. So there's an example of a buy. It's super simple. It's not a very difficult strategy. You just have to follow the criteria step by step. They don't come up very often, but when they do come up, they typically do hit. It's a pretty spot on reversal pattern, as long as you guys are using the tools properly. So this is one of the main strategies we use when the market's consolidating. Obviously, it's in the name, consolidation variation. The market hasn't been consolidating lately, so it's just been pretty directional. So we've just been taking directional moves. Let's see. Question from Ishan. Ishan said, would you take today's 20 minutes after open? Would today 20 minutes after open be a CV entry? Let me go check. So let's go back to that real quick. I don't think there was one because I was looking. Let's see, do you have a specific timestamp for it, Ishan? Yeah, I'll just go back to 6:30. You said it was for a buy. Let's just go back to 6:30 over here. Let's just play it through. So you said it was a buy. I mean, just scroll. I'll replay it and we'll see if I see the entry here for you. So I don't see any entry here. Keep running through it. I don't know if you're talking about this one right here. I didn't see any entry here. Okay, 650. Let's go to 650. Oh, it's like really small. Okay, I see. I see what you're saying. This is like so small that I don't think I would take it because it's gonna be hard to tell if this candle closes green. I mean, this is like you had to be like really paying attention to this candle here because it's hard to tell because this was probably like bouncing back and forth, and at the last second it probably pushed up. So I think it's too flat right here, so I wouldn't take it. I mean, for me personally, I wouldn't take it. If you really like these CV entries, don't have me stop you from taking it. Because if you really like these entries, then focus on this only. And I mean, the strategy works if you can find them. Like they're again right here. So this is the one that you're talking about. The entry would have been, I guess, 15.15. The volatility was a little high. Looks like it pulled back a little bit, would have filled, and then it would have shot up to full TP. So let me go back to your question. So yeah, this is a valid entry. It's just like, I think during real market movement, this would be too hard to catch. Like you'd have to like literally watch the candle because it's so small for it to close and you might miss it. Or if you wanted to enter late, sometimes this is what happens. Like sometimes the candle will come up and then you see this candle kind of pull back a little bit. And then you're like, oh, this entry, like you see the CV there and you want to enter it late, then you could always enter it late. Like if it pulls back like this, you can get in for a discount. So instead of getting in right here, you actually get in a little bit lower and then you can get in and it shoots right up. So it's up to preference. For me personally, I wouldn't have taken it because the candles are so small. But if you really wanted to take a CV entry, I would consider this a FOMO move, right? If I was to take this myself, I would consider this FOMO. I would consider it a bad entry. But again, everybody's analysis is different. So if you would have analyzed it as a good trade and would have fit your criteria, then you can go ahead and take it. But for me personally, I'm very conservative and I don't like taking trades that I'm not for sure. If this candle was bigger, so if this red candle was a lot bigger, like say for example, this candle was like this one, and then you had a small green candle next to it, then okay, I'd maybe take it. But because both of these candles are super small, for me personally, it's just not one that I would take. Yeah, it's I'd probably wait for another setup. So yeah, no, thanks for mentioning that because I didn't even see that from today. It's so small that I totally missed it. Let's see. I think Vimal has another question. Let me scroll up real quick. So Vimal's question is it necessary to have the low high? Yeah, it has to be on that first candle because that's the whole point of the strategy, Vimal. Like it has to be there because that's the reversal, right? You're looking for price to establish the low and you're basically catching the bottom. That's the whole point of the strategy. So like, for example, right here, actually, there's a CV entry right here that just passed pretty recently. It would have to happen on the first candle because if you don't have it on the first candle, then there's no reversal there, right? You're looking like this is the pattern you're looking for. High with the green candle, reversal. Low with the red candle, reversal. High with the green candle, reversal. If there's no high low there, then there's no reversal. You're kind of just taking random movements in the market. So you would have to have that high low on the candle because you're looking for the reversal off that high low. All right, so I think that's it with that there. Did I answer all your questions, Ishan? I just want to make sure I didn't miss anything. Because I know you had like a two-part question earlier. If I did miss, just let me know and I'll review your question. I'm not sure if I missed anything else that you wanted me to review. Vimal is asking, should all pivots be aligned? What do you mean by aligned? Because I know earlier you were mentioning how like the one that Ishan called out, you said they weren't aligned, but they actually were aligned. So let me see. Let me go back to that example. So yeah, I kind of want to retouch on that on your question there. Because they are aligned right here. I mean, they're all pointing, like they're not pointing upwards, but they're all still bullish, right? If you're talking about like they're all no, so they don't need to be aligned. It's going to be almost impossible for you to catch anything that's aligned because this is a reversal pattern, right? Yeah, it's almost impossible because the thing is when you're looking for these reversals, price is coming down. So if price is coming down, the first two pivots are going to cross over. So see how this here is crossing over, like you mentioned. I don't think you'll ever see a CV where it's aligned. Um, it would have to be like a continuation. So you're not really the trend requirement isn't it's a relaxed requirement. You could even have it crossing over and not fully confirmed yet, and you can still take a CV in that entry. Um, because it's never going to be for sure. Like this is actually a better entry because it's so low and it's bouncing off the lower pivot over here. Let's see. So the only thing that you would be concerned about is if the pivots wanted to cross pivot four. Pivot four is going to be like the last pivot for it to be bullish, right? So for example, over here, this is where you would be looking for the trend, right? When the pivots cross over, so let me show you when it crosses finally. Okay, so for example here, see how the pivots cross below pivot four? At this point, now you can look for bearish trend. It's not confirmed yet and it's not aligned, but you can start looking for some possible sells here because the odds of this pushing down lower are very likely. So yeah, because the retracement is always going to cross over. It doesn't mean it's going to reverse, but or continue, but it's always going to cross over. Let's see, the mall said 643. Okay. No, let me see. Go back to this over here. No, so it wouldn't be here because it's not on the first candle. Well, so I think the thing that you should just focus on here is just like because this candle is farther, right? So like when you're looking for the highs and the lows, you're looking for the reversal to happen at off that candle. You're basically identifying the top or the bottom. So like for example, here this couldn't be the bottom because, or this couldn't be the bottom, this red candle because this candle went further. So you always want to have that first candle. That's the whole point of the strategy. The whole point is identifying the reversal, right? You can't have a reversal on the second candle if it didn't reverse on the first one. So the first one is always going to be the reversal, and you're looking for a push away from that first one. So I would just recommend sticking to their criteria so that there's no confusion. Because I could see where the confusion can come up. Because sometimes I do see CV entries, and I'm like, oh, this looks like it could be an entry, but it's not, right? It ends up reversing because it's right at the sessions. Or not reversing, but it doesn't actually turn from there. Yeah, no problem, Jamal. Let's see, one last question from Ashan. Ashan said just one more. There's entries today at 9:27 your standard time. Let me check. So let's go to 9:27. Let's fast forward to that there. Let's see, 9:27. Almost there. Okay, so 9:27 right here. So I don't see anything over here at 9:27. Sean. Unless it's a different hour. Am I on the wrong candle right here, Gashan? So I don't see any entry over here at 927. Yeah, unless you're talking about a different strategy. But for the yeah, because I'm over here at 927. You'd have to have like a low with the, or you'd have to have a high with the red candle, and then followed by, or you're talking about this right at 929. So this right here wouldn't be a CV entry for me because this candle would have to be bigger than this one, right? The following candle um would have to be a smaller candle. But so here's the thing. Here's the thing. This here is a V1 variation. So even though it's not a CV, this here is a V1 variation. So you still have an opportunity for entry here because this is a double body rejection, right? Or sorry, not a double body. You have a double wick rejection here. The wicks are on the same level. So this wouldn't be a CV entry, but this would be a V1 variation. It's they fall under the same family. So the CV is just a variation of the V1. The V1's the regular one. And I gotta rename these strategies because I know I have a V1 here. There we go. So same thing here. Confirming the overall bias, it's bearish. Obviously, price is below the pivots, trend meter is red, pivots are angling down, divergence is shifting down. This here would be a V1 variation. You'd set your TP stop loss to either 10, 1020, 1030, 1515. For me, again, I would probably use 1515 because that's what I'm typically using. And yeah, that'd be your entry there. A plus setup for a V1 variation. So this would be a V1 variation. It wouldn't be a CV, but it'd be a V1 variation. Let me go back to your question here. Let's see. So Sean said, so there is a big green candle and a small red candle. It's 727. Okay, yeah. So this right here, the one that you're referring to, it goes back to what Vimal was saying as well. So like the high has to be the green candle because the high here is a red candle. There's no entry there. So yeah, this wouldn't be a CV entry. So if you look at the criteria over here again, it'd have to be either a double body, double wick. But either way, if even if there was a double body, double wick here, it wouldn't be criteria because you'd have to have a high with the green candle. So this right here wouldn't be an entry for a CV or a V1 variation. The only entry that would come up around this area would be the V1 variation that happened right here, or actually the one before it, right here. Yeah, I know it's a little confusing sometimes, but like the more and more that you see it, it'll make more sense. It's because it's very specific what you're looking for, right? I know there's going to be some times where like mistakes will be made and you might think, oh, this is probably a CV entry. I would think this is a CV entry too. Like, I think if this was happening real time and I was just like really focused on looking for a CV, I think this would have just it would have skipped my mind. Like, I wouldn't even think like, oh, because this is where it kind of screws you up. This is where it'll confuse you, right? Because if you're watching this real time at 627 or 927, you can see that the high is on the green candle, right? So this is where it would trip you up and you would get confused because you're so focused on this right here that you don't realize that this candle over here actually pushes past it, right? And that's where you get caught. So yeah, the criteria for the specific pattern is basically you have to have the high here, but I can see where you could get confused because if you're looking at this real time, you're so focused on this right here that you don't look at this one. And this is where it invalidates the entry. Yeah, no problem, Sean. All right, so let's see. Vimal's asking, do they work well with NQ? They work well with anything. Doesn't matter what you're trading. Again, all these strategies are based off momentum because that's what they're like. As long as the asset is volatile and it's moving, you can trade. I mean, you can trade pretty much any strategy on any asset. It doesn't matter what asset it is. You can trade it on some random asset if you want, right? If you want to trade NQ, it works on NQ. Let me see if I can find an example here. Like that's a question that I get a lot, and it's like the answer is always the same. It doesn't matter which strategy, if it's a CV, V1, market flow, whatever it is. If there's volatility in the market, all the strategies we take are based off volatility. So if the market's moving, then you can take the entry. So for example, here, like the same strategy we just discussed, right? The V1 variation, double body, double wick right here. Actually, there's a CV right here. So this is a double body, which is a V1, but it also falls under CV because this candle here is smaller. So V1 variation, CV right there. If you were to take this here, the TP stop loss would be different for NQ, of course, because it moves differently. It moves a little faster. So you probably use a 30-30 there. And you can see that it works right there, right? I can pull up a different random asset if you like. Let's see. What's a random asset that you would never think of? Let's go to futures real quick. What's a future that you would never trade? Crude oil. I know people that trade crude oil, same thing. So crude oil here, same thing right here again, right? At crude oil. So same thing, a high with a green candle, you have a smaller red candle right here. I don't know what the TP stop loss would be, of course, because I don't trade crude oil. I'm assuming it'd be, I don't know, 5.5. 5.5 TP stop loss. And you can see it works there, right? It doesn't matter what you're trading. Like I feel like people get too caught up on like the asset. The asset doesn't really matter. Um, I mean, what's another random asset that people trade? Copper, right? I've never seen anybody trade copper, but I'll show you an example here that it works on copper as well. Same thing right here, same pattern. So here goes another CV entry. Actually, there's no CV entry right here, but this is a V1 variation. So there's a V1 right there. Or I guess this could be a CV entry. I just can't tell if the candle is that much smaller. So again, right here, there's a high with the green candle. It's followed by a red candle. It looks a little bit smaller, but about the same size. If you were to trade this copper, again, I don't know what the TP stop loss would be because I don't trade this. I've never traded this before. I think 10-10 might be a little too high. I guess 5.5 works here too. And you can see there that it works. So it doesn't really matter what you're trading on. You could trade whatever you like. Just make sure that the asset is volatile. And typically, all these assets will be volatile at a certain time, right? If you want to trade, I don't know, if you want to trade silver, if you want to trade gold, it's gonna be volatile around the same time. So like if you want to trade in the morning, you can basically trade anything. Whether it be gold, silver, crude oil, I don't know, YM and QES. If you're trading at 6:30 to 8, like we normally do, you can pretty much trade any asset because you'll see any asset, like all these assets, they all move at that time. So if you look between 6:30 and 8, again, it doesn't really matter what you're trading. You'll be able to find entries here. So I mean, if you want to be different and trade something else like NQ or whatever it may be, there's a lot of people in the group who actually trade NQ. That's why I've been looking at NQ myself because it's a little more volatile than YM at times. Sometimes they switch off. Sometimes one's faster than the other. Sometimes they're the same. It just kind of depends on the day. But yeah, no problem, all. So, all right, I think those are all the questions that we have. If you guys have any more questions where you want me to cover something specific, just hop into the chat and then we'll we'll cover it. So give me 1 second, guys. I'm gonna step away for just 1 second, run to the restroom, and then I'll be right back. All right, guys, I'm back. So I think the other question was from Vimal. He was asking what is the best way to pass a 50K or 150K? So your best approach is I would take riskier trades. So let me see if I can pull up the criteria for what those accounts are. So let's just get it down real quick. So the criteria for a 50K account, which is obviously gonna be the easiest one. Um, 3,250 or 2,500. So let me just add this over here. So Apex 50K count pass 300K or 3K. Max drawdown is 2,500, right? So that's for a 50K, and I think you said 100K, right? Apex 100K count pass is check. Pass for that is I don't understand why the website does it sometimes. It's weird. Okay, there we go. 6,000 and 3,000. Oh, 150. Okay. So 150. I mean, it works the same way both ways. It's just the risk is different. So 150K is going to be 9,000, 5,000. 9,000 and 5,000. Okay, so um here, let's just split this up. Try and piece it that way. So to pass this and be, I guess, and again, it would just depend on your trading style too, but I'm also though the one question I would have to ask you is how many trades do you want to take a day? Or how many trades do you plan on taking a day? Because that's how we would determine how much your risk would be. Okay, 2, 3 max. So we'll be on the more riskier side. We'll say two trades. Two trades but higher risk. So okay. So your max drawdown is 2,500 for the 50K account. You basically want to give yourself 5 days of back-to-back losing, right? Like you got to really screw up pretty bad to get to this point. Um, like if you have 5 days and you have like two trades back-to-back losses every single day, that's the only way to blow your account. And this is conservative, but also risky. So let me just put this over here, 500, and then $500. Then same with a 150K account, 5,000 divided by 5 is 1,000, of course. Daily risk is going to be 1,000. Okay, so if that's the case, then and then your contract size is just going to be so if your daily risk is at each trade risk. You're just gonna it's basic math, right? So you're basically halving everything. You're basically halving everything. Two losses a day allowed. So you're just basically halving everything. So it's not super complicated. So this is basically how much you would be or what you would be risking, right? So in order for you to pass or for you to pass the 50K, so like 3,000 is your pass, divided by 250, you need about 12 good trades. 12 wins to pass, right? And then your 150K, 9,000 divided by 500, 18 days, 18, not 18 days, but 18 trades to pass, 18 trades, 18 wins to pass. So that's basically what your risk would be. I mean, if you're taking 2 trades a day, if they both win, then that you'll be able to pass your 50K within like 6 days, right? Say, for example, you have like 6 really good, like you just have a good week. So you have 2 good weeks, and then you just have 6 back-to-back days where you just have, 2 wins per day. You can pass your 50K within like 6 days. Same with the 150K. So if you just say, for example, you have like a really good week, right? 18 divided by 2, you need 9 days, like basically 9 days. You could have a couple of back and forth days, but I think you'd be able to pass pretty conservatively this way. If you want to take more risk, of course you can. You can always just increase the contract size, but for the most part, this is how you would pass without having to worry about your account being blown. So if you want to take a bigger risk, you can always increase your daily risk, right? So instead of doing 500, you can do that by 4 days or by 3 days. Like if you want to be super aggressive, they'll do 5,000 divided by 3 days. And then now your risk goes up to risking about 800 per trade, right? And if you're doing 833, so if you're doing 833 per trade, 3,000 divided by 833, then you can pass in 3 trades. Or no, is that right? I don't think that's right. Divided by 800. That is right. Okay, so I mean, if you want to go super aggressive, like right now, if you want to go super aggressive for this week and next week, you can technically do that. This is kind of what Nick's doing. Is Nick here right now? So Nick is only taking 1 loss a day. So he's able to increase his risk, right? Because he's just like, if I take 1 loss, he's done for the day. So for him, he can actually increase. Nick just stepped out. He was here, but Nick, so if you're doing 1 trade a day or 1 loss a day, then you can increase your risk. You'd be able to pass with basically 3 good trades for a 50K account, and then for the 150K account, 9,000. And so you want to risk more, like 2,000 a day divided by 3 or 3,000. You only need 3 trades here too. So again, it's just up to your risk appetite. For me, I should probably step up my risk. Yeah, I mean, personally, I probably should step up my risk on the 300 accounts because those things take forever to pass. But on these other accounts, you can take longer. So 6 trades. Wait, is it 6 trades? I feel like it'd be less, Lamal, because if you're doing, so like, oh yeah, no, so that's if you're doing 2 trades. But like I was saying, if you're doing 1 trade, you could do it a lot quicker. Yeah. If you're gonna half it, then yeah, it would take you 6 trades. But if you're gonna double your risk, then you can do it in like basically 3 days. 3 days, which is equivalent to 6 trades. And that's kind of what Nick's doing. So I know Nick kind of stepped away, but Nick, he doesn't like taking losses. So if he takes 2 losses, it just kind of messes with his trade psychology. For me right now, I think I'm okay with where I'm at because it kind of gives me the opportunity to break even for the day. I think it's better on my trade psychology for me to have that opportunity to break even versus ending the day in the red or very in the red. So for me, I'm okay with 2 trades a day. So yeah, this is just a quick breakdown. Again, you said your contract size will be 3. So 3 times 5 times 15, 225. Yeah, you could use about 3 or 4. Yeah. So if you want to risk a little more, you can do a 4. It's not going to make a big difference. It's only off by like $50. So yeah, if you want to be conservative, use 3. If you feel confident that day, then use 4, right? And then you'll pass even quicker. I don't want to force you to do that, but like, you'll basically take away like two trades. So like basically take away one trading day. Yeah, 'cause you'll have to have 10 wins. So it just makes things a little quicker. But then also you have to think about your trade psychology. You don't want to overdo it and then blow your account or risk going too deep into drawdown. Yeah, so pretty straightforward. Well, I think you're on a good path as long as you know you're understanding your risk and you're not going to overtrade or revenge trade or anything like that. I think you should be solid. Yeah, definitely. Let's see. Question from Silvermall said, yeah, on the last day, the rest of rest, I risk full 10 contracts. Made 20 yesterday. Nice. On the reset. Yeah, yeah. Yeah, so it kind of depends. Yeah, it depends on the day. If you feel good that day, increase your contract size. If you don't feel so great, then just keep it at regular. For me, I'm like kind of more on the riskier side right now because we're getting close to the promo ending. So I kind of want to get it over with for the promo ends, even if I have to reset the account. All right, question from Valentine. Valentine is asking on Apex, do you ever see orders come from nowhere and sometimes not be able to close out? So that's never happened to me. I've seen people who talked about that, and I feel like a lot of people don't clear out their orders. So for me, that's never happened because I always clear out my orders. Whenever I'm done trading, I always click flatten all and I close out all of my pending orders. I feel like with a lot of people, they have pending orders that are sitting there and then they automatically trigger because, so for example, let me show an example over here. Um, okay, so say for example, you entered a trade over here for, let's say like a sell. Okay, so let's use an example back here. Okay, so say for example, you enter a trade here for a sell, right? Valentine. So say for example, you enter a sell here, right? And you have your TP stop loss is like 2020. Say for example, this is your trade. And then when you have your TP stop loss there, your TP stop loss set up on the chart, right? So you have your stop loss up there, and then you have your TP down here. So what happens with a lot of people is that they don't close out all their orders. So say for example, price comes down, it hits your TP, right? Say it hits your TP, this thing is no longer there, right? What happens is their stop loss is still there. People forget about it. They don't like sometimes the platform doesn't close it out and it's stuck right there. So people always use this excuse and they say that, oh, it just automatically fills in order. It doesn't automatically fill in order. Your stop loss was still there. It just never canceled out. So what happens with a lot of people is they think they're out of their position. Like, oh, I want to trade, I'm done. Right. For me, I always hit cancel all and I cancel all my pending orders. What happens like a few hours later, see how price comes back up? And then see how it fills it right here. This is where people complain about getting their order filled because they have a pending stop loss there that's already filled. And then they're like, oh, I got a random order that came in. It's not random because your stop loss is still there. And then what happens is price comes down and it stops them out. And they're like, oh, I never entered a trade, but realistically, their stop loss was just hanging out there. So this is the common thing that happens. I mean, I've seen it before, but the thing with me is like, I'm always so paranoid about my trades that I always close them out. So it's never happened to me. I've seen it happen to people and I see people complain about it all the time, but that's usually what happens. It's they enter a trade and then their stop loss is still sitting there. Or say, for example, it hits your stop loss, right? So say the opposite happens here. Say, for example, you enter a sell right here. Say you enter a sell like right here, and this is the opposite. So this is what happens with a lot of people too. It's the same thing, it's just the opposite direction. So like say you enter a trade here, and then say it hits your stop loss, right? Hit your stop loss. What happens is that your stop loss order is no longer there, right? So stop loss order is done. You're out of your position. You think you're out, but your TP is still sitting right here because it never canceled out. So what happens is when price comes down, now your TP is this order is now filled for a sell, and now you're in the position. So that's typically what happens. I mean, I can't blame anybody because of course you're going to expect that your trade should be closed out, but every time you take a trade, you should always close them out just to be sure. because I don't think there's random ghost orders. Like I've seen people complain about that. I don't think there's ghost orders. I think what happens is people just have their limit orders just pending. Because what happens a lot of times when you enter a position is that it'll set an OCO. Usually it's an OCO, which means order cancel order or something like that. I forgot what it's called, but what it stands for. But it's an OCO order where it places it on the chart for you. So when these orders over here come up, like what happens is they're supposed to trigger each other. So when one of them gets hit, it's supposed to close this one automatically, but it doesn't always happen. So like that's why you have to always hit cancel all or just flatten them all out. So you have to go to your pending orders to cancel them. So you can't do it in NinjaTrader, you just have to go to your pending orders. If you go to your I forgot what it's called, your control panel, it'll have all of your pending orders there. So I always check that. Whenever I close out my NinjaTrader, I go there, I make sure there's no orders that are pending right there, and then I close them all out. Or on Replicano, like with what he mentioned, there's a flatten all button. That's what I use too. So whenever I get out of a trade, I always click on flatten all, even though I know I'm out of my position. I click flatten all so everything closes out and there's nothing sitting there. But yeah, NinjaTrader, you have to go under your control panel, go over to your orders, and then it'll have your pending orders there. So you can just close them out yourself manually. But I mean, thankfully, it's never happened to me. I mean, it sucks for people that it happens to, but you know, you guys got to be responsible for your account. I mean, I hate to say it. I know like Apex should take responsibility for it, but I already know how they're going to say it because they don't want to pay. Well, I mean, it's not that they don't want to pay people out. It's just that they don't want to. They don't want to make adjustments because obviously, you know, they're dealing with on thousands of people on the on Apex, so it's like hard for them. So yeah, that is the main thing. Yeah, but Molson, people should trade with ATM. Yeah, I always trade all my trades with ATM. Let's see. Delicia said to take partials on NinjaTrader enter a trade in the opposite direction for the number of contracts you want to close out. For example, if you have 10 contracts and want to take half, close out 5. Yeah, exactly. So like what Delicia said, that's how you do you would close out partial because that's what happens with a lot of people too. So like exactly what Delicia said. So this is what happens sometimes because not everyone closes out of their positions fully. So say for example over here, you know, the same thing that where was I looking at? Like right here. So this is what happens with a lot of people too. And this is probably not the case with e-balancing, but this is what happens with a lot of people. So what happens is they have their TP stop loss set up like this. And what happens is sometimes that they only close out partial. So say for example, they enter this with 10 contracts, right? And then when price hits their TP right here, they manually close out for like partial. They only close out for like maybe half of it. So they entered with 10, they exit with 5, and then what happens is they're still in this position. So when price comes up and it stops them out, they're like, oh, what happened? It's because they only closed out half their position and then they end up closing out half right here. So they end up at break even. I mean, there's so many different scenarios that I can mention to you, but that's like something that happens with a lot of people too. So just make sure that you close out of all of your contracts and all of your pending orders whenever you exit a position. That's the only way I can almost guarantee you won't get caught in what people are complaining about ghost trades. Because I don't think ghost trades are real. I see a lot of people complain about it, but I don't think they're real. Not just because it hasn't happened to me, but you know, it's really weird for a prop firm or just any company to put a ghost order in for you. I just don't see that happening. It just doesn't make sense. I see a lot of people complain, but a lot of times it's because they have a pending order from the previous trade. So, all right, guys, I think that is it. Over here with those questions. So I think we've answered pretty much all of the questions here so far. Now we're going to cover the market flow strategy that we've been applying during these live sessions. So let me see if I can find an example over here. I'm going to go like, okay, so there's one. Let me, we're going to ignore the red flags here because it's just going to be too difficult to find quality setups here if we avoid these red flags. A lot of times I do take trades at red flags, but sometimes I don't. But here's an example over here of like an entry. So I don't have specific criteria for this strategy, but I'll just kind of go through my thought process. So the way that this strategy works, and here's actually a better example because it bounces off the session. So the way that this strategy works is first, I identify my bias. So I'm typically only taking buys or only taking sells at a time. It's the same bias that I use for the CV. So I try to identify where the direction of price is with regard to the trend. So first over here, you can see prices above the pivots. The pivots are angling up. The trend meter is green. We can see here that the trend is currently bullish, right? So what I look for next is once I'm able to identify the direction of price, I now look for targets. So I'm like, okay, if price pushes up, target's going to be, there's a couple targets here. You're looking for like where price is likely to push. So there's a higher high right here. This is a resistance and it's also liquidity. There's a couple target price points. There's a level right here, which is at the 450. There's liquidity right here. There's a session. There's another session and there's a level up here. So there's basically a bunch of areas here where I'm looking for price to go, right? So first of all, I identify the bias. So I'm obviously looking for buys here. And then next, I'm looking for targets for price to go to. So if price is going up here and I'm going for a 1515 TP stop loss, I'm like, okay, perfect. I have enough space here to reach these targets, right? And I just try to ride the wave or the flow of market to those price points. So here's an example of an entry that I typically take on the live session. So you can see how price was bullish right here, and it's now pushing down. So what I typically like to look for is a volatility spike. I like to see price pull down very hard initially and then correct back up. So with this next candle over here, I'll try to do it as slow as possible and I'll just keep replaying it. So this candle over here, if you just focus on this next candle that comes up, you guys see how it starts off red and then it spikes up? That's the price action that I'm looking for. So I'll play it again. This candle right here is red. It's kind of slow. And then all of a sudden this thing comes down super hard and then it spikes up, right? When I see that price action live, I'm looking for price to pull down and I'm looking to enter right here as it swings back up. That's like the main time that I'm looking for entry. So that's how I've been taking these entries here on the live session because I'm looking for that price action. Again, I'm looking for a sharp drop in volatility against the direction and I'm looking for a correction back up. So again, right here, I'm going to replay that candle. And you can see it how it happens in slow-mo. Let me zoom in even more. Just focus on this next candle here. Comes down red and then it spikes up. That's going to be the entry right there. Let me continue on further and see if there's any other opportunities here. There's actually another one right here. I mean, I probably wouldn't take it after because I just got into one at that point. Not that one. Okay, so there's another one right here. The only problem with this is that it's at the session. So same pattern again. Let me just scroll back a little bit. So this target's already been hit. This target's already been hit. The next target that we would be looking for is going to be the next session up here. So if I zoom in again a little bit right here, just focus on this next candle that's going to come up. And I'm basically looking for this over here to come down and come up. So same thing again right there, if you guys can see. Price comes down very quickly, it starts off red, and then initially it pushes back up. It's hard to see during the replay. This is something that we have to look at during the live session, but I'm just showing you guys a pattern here of what I'm looking for. So the target price point is the session right there. And That's basically the pattern that I'm looking for. I'm looking for price to come down a little bit real quick. And then when it comes back up, that's where I make my entry. And then I try to ride it up to either close to the target price point or just for a fixed TP stop loss. So right there, it pushes down, it fills right here. And that's pretty much where I would ride it. And then it pushes up again right there at TP. And there's actually another opportunity on this next candle. So if I would have missed that one, there would be another one right here. Well, this would just be another entry. So yeah, if there's any questions that you guys have, there's another one right there. You can see that it kind of happens very quickly. Again, when price comes down and it comes right back up, that's where the entry would be taking. So as soon as it comes down and it comes right back up, I'll be waiting to take this for a buy. Then I try to ride this up even further. So if you guys have questions regarding this, I mean, feel free to hop into the chat. The problem with this here is that it's hard to see, it's hard to show you like the actual pattern because you can't replay by the second. I wish there was a function like that where you could actually see the candle moving in real time, but there is no way to do that. You have to see it done real time, like when the actual candles are live. And then there's another one right here, same thing. Following candle right here. You can see how it comes down and then it spikes back up. And that's basically where the entry would happen. Let's see, Vimal said, what take on live candle? Why not take on 30 seconds side by side? What do you mean, Vimal? Why take? Because so the 30-second candle still doesn't show you how the candles are moving by the second because it can spike down for 1 second and then shoot up. It's not, the 30-second doesn't show you what happens. So what happens within those 30 seconds, right? Even if you go down to the 30-second candle, what happens between the 30-second candle? Because this thing could push up faster than it doesn't take 30 seconds for the candle to come down and come right back up. It could happen in 1 second. It can come down in 1 second and it can shoot right back up at the next second. Sorry, I'm just confused with could it not retrace back opposite? Yeah, it could. I mean, you can't predict the market. I'm not a psychic, right? I can't tell you, oh, just because it like pushed off this point, it's gonna keep pushing up. That's the whole point of the strategy, right? That's why you have to see it real time. I mean, if I could tell the future, I would tell you, but I mean, that's why I'm here on the 1 minute. And you have to see it real time. Like you can't see it when it's like it's easy to see here. Like I'm showing you guys these examples here, and it's super easy to see right now because it's like, duh, obviously we take a trade there. But during like the market is like when the market's live, there's so many things going on. You're like, your hands are getting sweaty, you're getting nervous, you're not sure exactly what you're looking for, but you can't tell what's going to happen next, right? Like you don't know if price, like even though this bounces off here, you could wait and maybe take it right here. But I mean, if you wait and take it right there, it's going to be too late. Sometimes like you wait for the candle to close, and then as soon as the candle closes, it can easily just reverse on you, right? I mean, this here didn't reverse. I was trying to use that as an example, but the candles can easily reverse. So like typically we wait for the candles to close, but a lot of times you just can't wait for the candles to close. Like the type of market that we're currently in right now, if you wait for the candles to close, a lot of times it's going to be too late. Like you have to take it mid candle, like while it's still active, while the price action hasn't confirmed yet, but it's still pushing through. Yeah, I mean, I wish there was a way to do that, Vimal. Trust me, if there was an easier way to do this, like where I can put a pending order, I think a pending order would be ideal, right? Because I'd rather have a pending order just waiting there and then fill it and then go to TP. But because it's happening so quickly, it's almost impossible to put the pending order. That's why I created the level strategy, right? So you guys have seen the level strategy that we've been applying. That strategy is good, but like I said earlier, if you wait for the candle, okay, so here's a perfect example of that right here. I mean, I wouldn't take this trade here, but here's a perfect example. Price closes above, and then if you wait for the candle to close, like this is already pushed up at this point, right? If we were to take a levels entry right here, we'd be screwed, right? It'd be nice to have levels entry right there, but price comes down and it stops you out immediately. So it's just the type of market that we're currently in. You know, you have to adapt with what the market's giving you. Like right now, the market's giving us like you have to be quick to enter these trades because if you wait too long, you're going to miss the entry. If you act too quickly, you might get in a little too early and you might get pretty much screwed right here. Like for example, I don't know how this candle was moving right here, but this candle could have easily went back and forth within the first couple of seconds, right? I can't tell you guys exactly what happened with this candle, but this candle could have easily came down a little bit, came right back up, and then came right back down. We could probably go to the 10-second candle. Let me see. Let's go back real quick. Or even the 1-second candle. So we could go to the 1-second candle here. Okay, so this actually, that example that I just told you about, so the candle came down, came up right there, and then it came back down. So it actually did do that. So now that we've broken this down, yeah, Sean said TradingView doesn't allow tick replay. Yeah, so the closest thing you can get is the 1 second, but you can only see like what happens for that specific day. So like this is like what I was showing you guys right here. This is a tick by second. I mean it's not tick, but it's second by second. This here is actually so price comes down and then your entry would have happened right here, right, as it pushed back up. Or I'm assuming this is where it would happen. And you would have gone stopped out right there. Right. So I mean this is as close as it'll get to like watching it live. So that candle closed right there. And it did push down a little bit. It didn't push down far enough. So I wouldn't have taken the trade because the wick wouldn't have been big enough. See if it pushed down to this point right here and then it pushed back up, then I would have been okay with taking it. But because the wick here was too small at this time, I wouldn't have taken it. I would have to have price push down a bit further and then come back up to fill. But this is pretty much as close as we can get to showing you a real example. But again, you know, when you guys are trading in real time, you have your emotions running high and you don't really have the ability to think twice. You have to like act in the moment. Because if you don't, you're probably going to miss the trade and then you're just gonna have to wait for the next one. Yeah, let's see. CJ said during live, it was one point where market retraced off the pivot, but you said you wanted it to retrace harder. Is it because you prefer the bounce to happen off the orange pivot versus the blue? Not necessarily the orange pivot or the blue. It's like basically any structure. So like, let me go over here real quick. I'll show you a couple of good bounces. So, well, the market was kind of slow over here. This is what I would consider a good bounce. Right? Looking at how big the wick is. So this over here, I mean, this bounced off the green one. This would have been a good bounce because you can see that the wick is as big as the previous candles, right? That's how you know there's a lot of volatility right there. This right here is an okay bounce. I don't think this is the best bounce, but it's an okay bounce. See how the wick here is not really that big? You can measure the wicks. So let's see, I'll measure this wick right here. This wick is 12 points. It's basically as big as the previous candle. Right? This wick over here is 4 points, right? It's not a big wick. The candles here are still bigger than it. Same with this one right here. This one over here is a little bit, so you can kind of measure this is about 10 points. This bounce is actually not too bad, but it happened like so late in the session that I wouldn't have taken a trade here. It's at 11:30 already. And I don't think there was any targets down here. So yeah, you just it's not exactly the pivot that I'm looking for, it's the size of the wick. Because the size of the wick shows that so this candle, let's just go back to this candle over here. Let's go to the 1 second. Okay, so this is a 1 second here, right? So I'm going to show you the wick here, CJ. Okay, so see how see this big push right here? This is now the wick. Let me turn off the pivots. So this here is the actual wick. You see how price pushes up super hard and then it comes back down for correction, right? And then your entry would have happened like right there. So this over here is pretty much what you'd be looking for. All right, Vimal. Yeah, no, definitely. I'll see you here on Monday. So have a great weekend, Jamal. We'll see you back here. Good questions today. Thanks for asking all those questions. I know you ask a lot of questions that are like hard questions, but I'm glad you do because I'm sure a lot of people appreciate that you ask the very specific ones that people don't really have the questions for. So, all right, Jamal, have a great weekend. But yeah, CJ, this is how you would measure the wick because this candle opened right here, and you can see how it pushes up and then it comes right back down super hard, right? So this movement right here is the wick. So see how it wakes up about like 13 points, and then it comes down super hard, and that's exactly where you would make your entry. Your entry would happen right there. And we're not even using the pivots here, right? We're just identifying the wick here. And that's where your entry would happen. 15.15. And it would blast right through your TP. So yeah, if you guys have any more questions regarding the strategy, feel free to let me know. Again, the strategy is better shown during live market because you can see how it actually moves. But I just wanted to show you guys the patterns to look for. It's not even anything very complicated. It's really using the tools here to identify the direction of price and then looking for price action for entry. Because you can see over here that there's a lot of opportunities for entry. There's like a big wick right there. There's a bunch of big wicks right here. Like a lot of different opportunities for entry. But it's really identifying the correction. Let's see, D said actually what happened a number of times is an order executed with a stop loss, but I've had NT enter me into a new trade in the opposing direction alone. My TP hits, had no pending orders. Once my TP hits, somehow becomes a limit order for opposite direction. Yeah, so D, you're the first person who's mentioned that to me. I've never seen anybody else that happened to, but now that we have someone here that it's actually happened to within our group, I think that's pretty crazy. The only thing I can think of is if you set a certain pending order, because I know on NinjaTrader, there's a lot of different pending orders that you can do. There's a limit order, there's a stop order. Typically, those are the main two orders, right? Limit order and stop order. There's a lot of different options. So I'm not sure if like maybe your NinjaTrader is executing those trades as a different order. Because there is a market if touched, that's one. There's a time order. There's a lot of orders that's in NinjaTrader. Like I kind of like played around with it and I saw that there was a ton of different orders that you can set. I don't know if there's something you mess with the settings, or I don't know if your NinjaTrader just corrupted where it ends up doing that. But yeah, if that's happened to you, I think that might be the case. You might just be when you set pending orders, it sets it up with opposing orders in. That's why whenever I enter a trade, I always have an ATM. So like I don't know if you use ATMs for all your orders, D, but if you don't, I think that would be the best case scenario to because when you set up an ATM order, it sets it up as an OCO. So once one of the orders is filled, it cancels all of the others. Some people don't use that. They just put a pending order and they don't put a TP stop loss. And then I mean that's probably what might have happened with yours too. Like if you put a limit order, the limit order probably, I know there's an order too that kind of flips, like what you just said. I just don't know what it's called. I've seen people actually trade that way. They put their stop loss as a specific type of order. So for example, someone over here has a stop loss order down here, right? Say for example, they have a buy entry. Say they have a buy entry here and then their stop loss is right here. There's a specific order that you can set where if it hits your stop loss, it automatically fills it as an opposite order. I just don't know what it's called, but I've seen it before. So like, for example, say this hits your stop loss and you're like, oh, I want to flip it. It automatically fills in the opposite way. So I'm not sure that that's what's being executed on your end. It kind of sounds like it is, but I can't say for sure. All right, Brett. Yeah, Brett said, thanks, Sean. I got to get going. Cleared up some questions I had. Definitely, Brett. So if you have any more questions, always feel free to reach out. I'm here to help you guys out. So, all right, Brett, I'll see you back here on Monday. CJ said during the live, you were saying you didn't like. Yeah, CJ said during the live, you were saying you didn't like the wicks, even though it was bouncing off structure and or pivots and didn't get why, but now I see what you mean. Yeah, It's not really the structure that matters. It's like the size of the wick. Because I want price to have like that sharp rejection. Like this is another example right here, CJ. See how this thing right here, it rejects off both the pivot and the so this is like a no-brainer here. If I was to see this, I'm like, okay, for sure, this is gonna be a good trade. Because it bounces off the pivot, it also bounces off the session, and it's a huge wick. Not a huge wick, but it's big enough. I think the biggest thing to look at is to see if it's bigger than the previous candle, right? This wick's 13 points. This thing's bigger than this candle right here, the one right before it. And now that you mentioned that, this kind of makes sense now because I think if you just look at that, like say for example, I'm starting to see even more patterns now that we've talked about this. So I'm glad we talked about this because yeah, so like check this out right here, CJ. Same thing, right? This wick right here is huge. If the wick is bigger than the candle before it, I think it typically pushes up even further. Because this candle is huge. Oh, well, this wick was huge. And it pretty much engulfed all these candles here. And it just shot up even further. That's crazy. Because those big wicks don't typically happen very often, but when they do happen, yeah, like even this one right here, it's a big wick. Or whoops, it's a big wick right here. Or you can even just measure it. If it's like 13 points or more, it's usually going to push further in that direction. Yeah. So I mean, we kind of learn something new every day. Like you can see, even myself, I've been trading for years, and I still like when I see certain patterns, I'm like, oh, that actually works. That might be something to look out for. Yeah, CJ said when it does happen, it goes straight to TP with no problem. Yeah, those are the best entries. Like when you see something like that, it's like a no-brainer. It's like if you see the big wick, that's why typically for me, I'm looking for like those big wicks because they happen like a few times during the day. Like for example, over here, let's see. So our live trading session was over here between 6 and yeah, like for this morning, right? This morning I was just I wasn't convinced to take any trades over here because like for example, here on open at 6:30, this thing was nice, but I didn't see those big wicks. So I was like, okay, I'm not going to take any trades. That's exactly what happened today. Like we could have taken the entries here. There was a wick. It just wasn't big enough. So I was kind of scared to take these entries. This one over here would have been okay, but I chickened out on that one, of course. See this one over here, 14 points, just like we said. If it's more than 13, it typically goes. But yeah, if you just look at the candles like during the live session time, let me turn off all the pointless. Well, every indicator here is kind of pointless for what we're looking for. But yeah, like for example, this green candle right here, perfect, right? Huge wick on the bottom side. And then it just shoots up even further. Like I think if you just focus on that, you'll be able to catch like one or two, like almost 100% guaranteed entries. I don't want to say guaranteed, but basically that's kind of what shows up whenever you catch a candle with a huge wick like that. All right, guys. So I think that's it for the day. If you guys have any more questions, feel free to put them in the chat. We've been on this mentoring session for about an hour 36. So if there's any other questions that you guys have, feel free to pop into the chat. I'll try to do these mentoring sessions more often. I know we used to have these every week, but I've just been busy with trying to start up the hedge fund that I just don't have time to mentor anymore. So I'll try to do this at least once a month, if not every other month. I think our last one was around this time last month in May. So we'll do a monthly one for sure. I'll try to do one every other week, but yeah, I mean, if there's any other questions, guys, feel free to reach out. So I think that's it for this session. If you guys have questions, feel free to hit me up on Discord. Otherwise, see you guys back here on Monday. Yeah, no, definitely, CJ. You're welcome. All right, guys, I'll see you guys on Monday. Have a great week.